Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news all about China today. But first, American housing starts fell more than expected in December, recording their biggest drop in just over a year. Markets were expecting starts on new housing to run at an annual rate of 1.275 million units, but the data showed the rate of only 1.192 million units. The construction of single-family housing had an especially steep decline, although the December numbers followed 2 months of hefty gains. The saving grace in this data is that building consents issued are holding steady. And as expected in China, they announced a strong GDP growth of 6.8% for 2017, and well above Beijing's target for the year of 6.5%. There may be scepticism about Chinese numbers, but not that 2017 was an improvement. Housing sales in China had a new record in 2017, both in terms of area and transaction value. 1.7 billion square metres of residential properties worth $2.9 trillion were sold in the year. The figures are 7.7% and 13.7% higher respectively than in 2016, giving an indication of how strong the price rises were. But the data also shows a clear cooling by the end of the year. Also cooling a little in December were Chinese retail sales, but for all of 2017 they totaled $7.8 trillion in the year, and that compares with US retail sales of $7.9 trillion. Chinese retail grew 9.4% in 2017, while American retail grew 4.2%. So it's clear that the size and importance of Chinese consumer will be greater in 2018. The world clearly has two major drivers of growth and trade now. There's an important change and transition. Another important shift in China is that per capita income is growing at different rates between average and median, indicating a strong rise in inequality. The average growth was 9% in 2017 and a faster pace, but the median growth was 7.3% and a slower pace. Unless reversed, this tension will catch up with them. What is striking is the speed of the change. And finally, among the data was an indication of how tough their environmental challenges are. Electricity production was up a strong 6% in 2017, and much of that was because they burn more thermal coal. In Australia, they've been hit with an unwelcome surprise. Their already stratospheric household-to-debt income ratio was thought to be 195%, but a recent change to include self-managed super funds has seen it balloon out to just on 200%. Back on Wall Street, the US Treasury 10-year yield is up 4 basis points at 2.61% today, and that is approaching a 4-year high. US 2-year yield is near a 10-year high. Bond investors will be sweating on losses. The equivalent 10-year China sovereign bond is up another 1 basis point at 4.04%. The equivalent New Zealand 10-year sovereign bond is up 5 basis points at 2.94%. Oil prices a little changed again today, with the US benchmark now just over $64 a barrel, while the Brent benchmark is now just under $69.50 a barrel. Gold is down $7 today at $1,329 an ounce. And the Kiwi dollar is marking time this morning. It's now at 73.1 US cents. On the cross rates, it's 91.5 Aussie cents, and against the euro, 59.7 euro cents. That puts the TWI at 74.5, a little change from this time yesterday. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.